With every new year comes all kinds of stock opportunities, both old and new, as every investor, both great and small, try to stock up their portfolio with what they believe are the best stocks. Some turn out to be great stocks and some don't. It's all part of the risky game of investing. However, there are some foundational concepts you need to learn when it comes to choosing stocks that'll help you stand a better chance of picking great stocks. These truths are what the world's greatest investors, specifically Charlie Munger, have used to build massive fortunes. And these concepts are what we're going to be sharing today. Charlie Munger is known for his investing wisdom, with which he has helped himself and many investors generate impressive returns. He recently made a shocking investment in BYD that realized a 15 times return and left the investment world stunned. Munger is famous for his investment approach, which he summarizes with his famous quote,
"All I want to know is where I'm going to die, so I'll never go there."
Munger applies this approach to the game of investing by analyzing investment opportunities and finding great investment ideas by working backward. Munger's investing strategy involves creating a doomsday scenario for his investment in any potential company and then analyzing how that company would perform in that worst-case scenario. If the company survives these harsh conditions, only then is it qualified to be a Munger-grade investment. Munger is a proven master investor who has helped Warren Buffett generate returns that have consistently beat the S&P 500 for many decades. So, let's take a look at 3 specific pieces of Munger's investing advice and some high-yielding picks that fit in with his wisdom and can generate unbelievable returns for investors. Number 1. Buy stocks that are easy to value. The first thing to do is buy stocks that are easy to value. Find a stock where the risk-reward ratio is asymmetrically in favor of whatever position you want to take. To do this successfully, the stock needs to be easy to value. If you're a new investor that doesn't understand some technical fields yet, then it's best to stick with simple investments like defensive businesses that generate stable cash flows and grow within a very predictable range year after year. These companies often pass on majority of their cash flow to shareholders through dividends or buybacks. They are the easiest to value because there are much fewer variables, and the estimates of future cash flows are much easier to arrive at. Number 2. Buy high-quality stocks. Charlie Munger always says a great business at a fair price is superior to a fair business at a great price. Great businesses make superior investments as compared to fair businesses for 2 major reasons. First, great businesses have superior competitive advantages because there's less uncertainty about their future and earning capacity. Second, great businesses often surprise to the upside because they have an established track record of building a solid corporate culture and a team of employees that know how to innovate and overcome unforeseen challenges and create new and exciting growth opportunities. This is what has helped to drive the superior long-term results of companies like Amazon, Apple, Tesla, and Coca-Cola. Number 3. Buy businesses that play the long game. The final Charlie Munger truth is to buy businesses that play the long game. When you look at newer companies that make the news today, it seems all they care about is making the stock go up, and that desperation can often lead them to make foolish mistakes. Many management teams are so concerned with financial engineering techniques just to stay on the good side of Wall Street analysts in the short term. But true value is created by investing in the long-term well-being of the business. 2 tragic examples of this desperate method of value creation are international business machines, IBM, and AT&T. Both of these companies repurchased shares hand over fist at elevated valuations in order to excite shareholders and appease analysts at the expense of making aggressive and necessary investments in their own future. As a result, both businesses fell into stagnant growth and underwhelming performance, and as a result, shareholder value was destroyed. Now that you have some of those negative nuggets of investing wisdom, we've done our research and we have 2 businesses that fit the descriptions of a good Munger stock, which seems to be poised to provide stable returns going forward. They're both real estate investment trusts. The first REIT is Realty Income. Its ticker symbol is O. It has reduced risk and improved profit margins through economies of scale. It has a phenomenal track record of growing its dividend for 26 straight years, and its total return performance has outperformed the S&P 500 since going public. The second REIT is Stag Industrial. Its ticker symbol is STAG. It's an industrial real estate value add that targets properties in secondary markets with issues that weaken their market value, giving it greater downside protection in case of a recession. It reported strong Q3 results, with lease-over-lease cash rent growth of 13.6% and same-store cash net operating income growth of 5.6%. Both REITs are attractively priced, according to Munger, with ratios below their 5-year averages, and may be good additions to the portfolio in the face of a potential severe recession and with interest rates likely to peak in the near future. There you have it. These have been some expert formulas on how to find great stocks for 2023. Thanks for watching. If you like our cutting-edge investment content curated by professionals with decades of entrepreneurial and investing experience, remember to like the video, subscribe to our channel, and join in on our alerts so you never miss our new content. Oh, and check out our other popular video on the screen.